Good morning, everyone. It's just about still good morning. We've heard a lot today already, and investment was one of those kind of key cornerstone topics that a lot of people like to discuss. I think hopefully today you'll enjoy both from an operator and both from an institutional and a private funding landscape. We can get some good information out of these guys. So I'll start. So transport and the landscape around investment. I'd like to split the conversation into the investors and those who have taken on investment to push that innovation forwards. So I'll start with Tiernan. The landscape right now, it's evolving. There are geopolitical situations that might make people use the word it's an uncertain landscape, but there are some certain things happening today, and those certain things are taking on private and public finance. So kind of what's your view on the landscape at the moment from your operator point of view?
Yeah, I mean, certainly uncertain, and at the moment very reactive, which from a private sector and certainly startup perspective is not ideal. I'm hearing a lot of terms over the last 6 months of hunker down and see what happens. But yeah, I mean, I think being a leader of a company, you're kind of an eternal optimist. Sometimes naively so, but yeah, I think in the long term, from what we've seen in history, in most industries, then innovation will prevail, and unfortunately for us as smaller companies, it's never quick enough. But I think that just requires more and more industry engagement, certainly with the private sector and at government and policy level. And certainly there's communities that we're involved in as a company are trying to drive those changes. But yeah, definitely uncertain, but still optimistic.
Sure. Well, I don't think there's any shortage of challenges that, from an operator point of view, when you start up. There are many of them. Arguably, you can say it's quite difficult to allocate funding at those earlier stages. But we also, Joe, we also have yourself from an operator point of view. You have closed some funding rounds, just like Tiernan has in the recent months. What does the landscape look like for you right now?
I think it's a great opportunity for small companies to come up. It's a little bit difficult because there's been a removal of government funding from a lot of the programs, and we saw that from starting with the US and then sort of bleeding over into other jurisdictions. But the thing that we notice is that industry goes from being sort of blinded by government funding to completely focused on what is the value proposition and how do I best maximize my investment in a new technology. And that is the same with private funding. So in a perverse or counterintuitive way, the removal of government funding has actually focused people on things like repowering, which is what we do, to maximize the asset utilization. And that's really where we see a lot more traction, a lot more interest in us now versus previously, where there's a lot more interest probably in new electric vehicles.
Right, it's a fascinating shift when what we're hearing from across the pond is that things like climate change and a whole bunch of other exceptionally important topics have been removed from the table, and investors are really looking at that sort of total cost of ownership piece and looking at the cost and potentially acting like a calculator, as it probably should from a financial point of view. But that early stage of innovation, the kind of drive for sustainability, won't go away. It's a cornerstone of why you guys get up in the morning and do what you do. The challenges with those early stage funding gaps are more almost fit within the investment landscape and staged correctly. But there are bigger partners out there that look at that have a different lens when it comes to investment. And I'd like to sort of segue that one back to Dan here. And sort of ask you about the role behind sort of more institutional, debt, equity, different forces of finance.
Yeah, so obviously National Wealth Fund established in October last year. It's got a remit for helping the UK on its journey to net zero and to facilitate regional local economic growth. Also as part of the kind of transition from the UK Infrastructure Bank to the National Wealth Fund, we're going to take on more responsibility to help regions deliver on industrial strategy, and we heard about that kind of in some of the earlier sessions today. What the Wealth Fund can provide is either debt, equity, or guarantees for projects, and so we will work with big schemes, which are large mass transit projects. We've deployed capital that's delivered new trains. We've invested in companies that have looked to mobilise smaller orders of zero-emission buses to aggregate them and then lever in private capital. And that's kind of a key thing for our organisation is we've got to demonstrate how we can crowd in private capital. And so for most of the deals that we do will involve that. And I think to date, of the 4.6 billion that we've deployed, we've levered in about 3 times that amount of capital. And that will be for projects where our ticket size is about 25 million or more.
So 25 million isn't that far away from where you guys might be going in the funding realm of things, but obviously the lenses do change from different types of financiers. So Tiernan, talk to me about the challenges you've faced to date compared to now overcoming some of those funding hurdles by getting some traction with investors. The role of that public resourcing around your business, whether it's finance or test beds or mobilizing assets around the country. Just talk to me about what that looks like to you at the moment.
Yeah, I think what we've seen in the past few years is the bottom-up funding, which is kind of the core of the innovation in any region, has fallen away slightly, and the top-down, so that the later stage companies, the larger companies, the corporates, has remained and in some industries increased. So that's great in some instances, but for the kind of grassroots SMEs being funded, a lot of that has fallen away, and I don't think we're going to see the effect of that straight away. No. I think the knock-on effect on innovation in multiple industries, transport included, we're going to see a few years down the line, unless there's a reaction.
Sure.
So that's certainly the landscape that we've seen, and thankfully we've kind of weathered a bit of a storm and got over those hurdles. And to Joe's point, actually, the past couple of years has been focused on value proposition and business impact and focus, really, and that has enabled us to continue along the funding journey. And we're now getting to some of those later stage funding milestones. But yeah, there's definitely a concern on my part for certainly the UK economy when it comes to the grassroots or SME funding stages.
So I'm going to stick with you for just a bit, because there's something that Dan mentioned earlier around that kind of aggregation piece of how you look at funding at that point. But from a technology point of view, your ecosystem, your counterparts, your competition, your network, collaboration, is there opportunities within this kind of slight uncertainty that you see that we might not see? Does collaboration help in these situations? Shared balance sheet resources, or technology stacking, as they call it these days. Do you see that in your...
Yeah, there's definitely opportunity for it. I don't think, unless that's actively encouraged from the investment landscape, SMEs are, spinning multiple different plates. So to navigate, some kind of stacking of technologies and therefore funding is tricky. It's really difficult to navigate when, an SME is trying to run their business day to day. It's a full-time job fundraising anyway, and that's just for your business. If you then stack on trying to merge with another company and raise funding for 2 or 3 businesses, then it becomes nigh on impossible.
Sure.
So I think there's definitely enthusiasm for it, but the practicalities, unless it's encouraged from the investment landscape, is very difficult to do.
Exactly. We've seen some movements towards sort of project finance-led models anyway from that kind of more institutional sort of private side, which does help.
Yep.
It helps you kind of manage resource a little bit better there. Joe, from your stance, we spoke about total cost of ownership just a second ago. If we remove the sustainability bad words being thrown across the pond, if you focus on that total cost of ownership piece, talk to me about what that means for your investment opportunities moving forwards, and maybe adoption of your technology as well, like you've got good traction. Tell me about where the appetite sits.
Yeah, so we've got investment from First Group, one of the largest fleet operators in the UK, because we focus on what is the total value proposition. So looking at everything from the warranties, obviously the technology, the core technology, the cost of running that technology, and that proposition versus buying new or running diesel vehicles. So for the audience, we remove diesel engines from buses and trucks and replace them with a clean electric drivetrain. We design those modular drivetrains drivetrains to be plug and play with the new vehicle. So we do that for two reasons. One is because it's cheaper than buying a new vehicle, but also it preserves an 18-ton vehicle from having to be remanufactured, so you're saving a lot of carbon emissions. And the speed with which we can get diesel vehicles off the road is very compelling. When 70% of air pollution caused cancers are caused by diesel emissions. So we see this, we're a B corporation, we're very mission driven, and we see that value proposition as a big part of why we do what we do. But when we sell this to fleet operators, it's all about what is the total cost of ownership, how inexpensive can you do this for me? I don't, and the comparison is directly to things like new or their current diesel fleet.
But this all requires a little bit of sort of test and learn from the industry. How are you managing that sort of proof of concept phase, which is always the slight hurdle towards when you get to larger infrastructure opportunities with your business? So how that test and learn phase,
So that's where groups like Tiernan's come in, because you need to support what you're doing with data. And there's a lot of misinformation and things that are going on. People want to tell a hydrogen story because it sounds really sexy and it sounds good, but it doesn't work on a math level. So if it doesn't stack up, it doesn't have a value proposition which enables a fleet operator to operate less expensively, with more resilience than electric, then it's an easy decision to go with electric. So we're technology agnostic. We could easily do hydrogen. We don't do hydrogen because it's very expensive, and that really is what it comes down to.
Thanks, Joe. Dan, opportunities within the space. Is there creativity still left within sort of interesting finance mechanisms, or?
I think if you look at taking zero-emission buses, and if I kind of flip that to the kind of, I guess, new build zero-emission buses, where people started was, range anxiety like people have with their electric vehicles, and, would the bus be able to do the route with the duty cycle I want it to do? And a financing model came about, which was kind of battery as a service, where there was effectively a guarantee that the battery would perform to deliver the solution that you needed. Market's adapting in terms of, you look at what's happening in buses outside of London, which has been kind of franchised for a long time. Local or combined authorities are all moving to that model. And does that then facilitate more leasing coming in? And that's similar, how we've done the work with Rock Road, where we will provide the shorter term finance along with HSBC, hopefully for that to be taken out by pension fund investment over time. So I think as the technology develops, as people get more comfortable, and I think you mentioned things like warranties. There's manufacturers now offering a 14-year warranty for a bus on a battery. That should hopefully take away some of the nervousness again around kind of how long that battery will last. Am I going to have to replace it 2 or 3 times during the life of the asset? Because that's a big capital issue that I'm going to have to think about financing in future years. So I think, as the technology develops and comes, new financing solutions kind of do emerge. I think, as Joe alluded to as well, a lot of the adoption has been driven by grant, and I think 56% of the buses that came onto the road last year were zero-emission buses. That's a lot more than cars are coming onto the road, and that's kind of been delivered quite a lot because there's been heavy grant investment both at DFT level and at Scottish Government level.
Yeah, that helps with the test and learn part of this whole ecosystem, which is so hard for us from an investment perspective to fully validate, because the market is spread quite thin with low margins, and technology access is either held by the larger companies or developed to a stage and supported by government to get through to that test and learn phase. But it's that block in between, that adoption and a scalable option here in the UK, which doesn't allow you, the scary thing is you guys would leave and leave the UK and go develop your technology at a larger scale. So the challenges for investment, Dan, I'm going to stick with you just for a little while. So we speak about some good news here, but some challenges that you see?
So, I mean, I think the key, if you look at transport, there's a range of projects, aren't there? So there's lots of projects which require public sponsorship. So if you're wanting to build a new rail line, tram line, etc., you need to have kind of the public as the main sponsor, because there's lots of issues to navigate through planning and et cetera to get that system away before you even start to think about where's the revenue going to come from and how's it going to build up, et cetera. And that, they're not small undertakings. So, we've got lots of projects that people probably want to do, but I think the Mayor of North East Combined Authority was looking to do extension of their metro system. Just to get to an OBC stage, they were having to commit £8 million worth of funding to be able to develop that project up. So that's a really big commitment to deliver a scheme. And so the ability to plan and kind of get infrastructure through quicker is kind of a key thing. And we all hear about the costs and how much they're going up at the moment. We talk to a lot of organisations that, in the past few years, construction inflation has been about 30%. That's impacting on viability of schemes and investment. So there's plenty of challenges there, but I think, as I mentioned, there's ways that kind of finance can work around those challenges. And if you're looking at the big schemes, I think one of the key things we're going to kind of need to think about a bit more is what other levers can authorities have to develop those projects? So, kind of rather than the Mayor charging a precept, what are the funding or fiscal levers can they have? And I know that was something that was mentioned in one of the earlier sessions today.
Yeah, no, there's definitely some opportunity with some of the new government mechanisms that are being introduced to local authorities, sort of empowering a little bit more financial decision making on that front. It's a new frontier, especially for technologists who are sort of regionally focused with some of their deployment. Tiernan, your route to scale, do you want to talk to us a bit about your vision on what you would like to see within that funding landscape, things that you wish you could ask government to help you support on, things like that you might want to see in the short term?
Yeah, I mean, similar to a couple of points that have been made, there's a bit of a chasm before you get to a certain scale where the technology is completely proven, it can have mass adoption or industry-wide adoption. There is a bit of a chasm, so there's many different mechanisms. I think more can be done from a grant funding perspective. I think there is a lot of grant funding out there, but it's so competitive, it's almost unattainable for smaller companies. And what we've seen is there tends to be kind of serial grant fund winners, which ends up essentially displacing those who lack the opportunity. So there's grant funding that can be done, and then I think there's more private-public partnerships. We've seen a lot of money being passed through to venture capitals for regional funds, which is great. I think more of that certainly is definitely helping, and I think more can be done from a tax incentive perspective. So the SEIS and EIS. Tax incentives for private investors, I think more could be done with that. Thankfully, that didn't fall away with the new government, but certainly in an early stage, that's something that I think we're probably behind some other countries on. So yeah, that would be those three things would be my ask.
Sure, good. Well, those are pretty close to what we always look at, obviously. So SEIS and EIS has helped that early stage, so it makes it quite attractive to start your business here in the UK. Once you get to a certain level of scale, though, there's going to be an awful lot of demand outside of the UK. So there's routes to globalization that you just don't want the company to leave here and not feed back to UK PLC. I'm probably going to open that question up a bit. Do you think there's room or an opportunity for newer mechanisms to help companies like yourself not just grow and scale here, but offer resource or potential capacity help that we can use to show the rest of the world what we're doing here? Make it a bit more attractive for the private capital to maybe look at that scale opportunity? It's a big question, but...
I think the very minor point for me, I think, is just investment at every stage of the company's life cycle. I think it's kind of fits and starts. We're doing very well in some. If you think of it as a life cycle of the company, we're doing very, very well in some parts and not in others. If you look at other countries, every stage of the company's life cycle, there's active investment or encouragement for growth there. So that would be my very minor take. Is we need to look at from SME to a publicly listed company, actually supporting that company throughout the journey, and that's going to be the encouragement to keep that company in the country.
small kind of commercial projects that also help those milestones for indicators.
Yeah, absolutely. The focus for the government is around economic growth, obviously. So the more projects there are within the country, the more it's going to encourage companies to get involved in those. And then if that's fitting alongside an investment landscape at every stage of the company's life cycle, then that's going to encourage what you were talking about.
Just checking on time. It's cool.
You've got 5 minutes. You've got a few questions on the slide.
Excellent. Right, so let's move to those because I think I've exhausted my panel just out of my own. We'll get there. Right, so we've got a question for Dan. What is the National Health Fund's strategy to leverage private sector capital to projects within your mandate? Do you approach this at a project level or group together at a sector or regional level?
So we're looking at private investment into in the kind of types of projects that we invest in, kind of predominantly at a project by project level, albeit as I gave the example with the zero emission bus investment, there may be multiple projects that can feed into that one project. We're a financial institution, so we kind of look at the cash flows of the individual project in relation to into that. Albeit we have provided some more corporate financing, if you like. So we provided a loan to GridServe, which it will use to help develop out its motorway EV charging network. We are doing a lot working with combined authorities, thinking about their investment pipelines as well. So that's looking with them about how, one, there's key projects that they might need to develop, but also two, where can they bring private finance in. So the team I work within, we've worked with a couple of the combined authorities which have gone and set funds up, which organisations can apply to secure funding for, again, things which cover off within our mandate.
Sure. Yeah. If there's any kind of takeaway to that, is we're a big believer in adopting project finance principles way before you actually need those principles or you're at scale enough to take advantage of it. But we can talk about that a bit later. I've got another question. So as a startup, the requirements for receiving funding, validation, traction, etc., are getting higher and higher, while the pool of funding, private and public, is getting smaller. Do you have any advice to navigate this situation? What is your outlook on the future if this cycle continues? I feel like that's a cycle that we've faced for a very long time, so I'd love to hear your opinions about today. Who would like to take that one on?
Yeah.
Joe?
Yeah, I mean, there's probably needs to be a healthy balance between risk and deploying that capital. I mean, we seem to have a very low risk appetite here in the UK for early stage companies. So by the time companies prove their market acceptance and revenue generation, and that risk is taken off the table, very often a lot of companies don't make it to that point, even if they're good projects and have a strong market fit.
Sure.
So it's really fixing that early stage risk appetite of the venture community here in the UK. And sometimes SEIS and EIS are good catalysts for that capital that lowers the risk for people. But you see funds and things being set up around SEIS and EIS that are taking on riskless innovation because they basically are charging the SME or the startup back for the capital that they're lending them. And it becomes a lend scenario where they have a risk-free profile. So it really is trying to inspire that risk capital to go into the early stage companies.
Yeah, we could go on that one for quite a while, so we'll be around afterwards as well. Okay, so we're at the 2-minute warning. So we've got a question. The private sector is going to deliver this data as it adds value to the wholesale data released by government. There is no sharing in contract. So this discussion needs reframing to be about the data trading and cross-integration. Do you agree? From a data perspective, I've got my opinions on this, but go for it.
You go ahead, Dan.
I don't know enough about the area to kind of really have a kind of more detailed.
We can move on. We've probably got one more minute. Happy to take that question offline if anybody wants to talk to me about that data play. Joe said a driver is air quality. Is that built into the business case? Who is paying for the better air quality?
That's one of the issues, is that the ancillary value proposition brought by electric vehicles or other things aren't really being figured into the decision by fleet operators. They're reacting to public pressure, but they're really reacting to the economics. And the reason that electric is moving so quickly is because the technology is moving so fast that the total cost of ownership is dropping constantly. And so the fleet operators are seeing that. They're adopting electric. It's making their overall operation more viable.
Sure.
But they're not doing it for clean air. So that's a societal benefit that we're not pricing in.
I mean, just the business case process doesn't kind of take that, on board, certainly as much as it perhaps could, but kind of just to give you some evidence of kind of how that works. Bradford instigated a clean air zone 2 and a bit years ago. They got the first results back after the first year's data. There's been 600 less GP appointments every month with respiratory complaints. That's, kind of 7,200 less GP appointments a year that have resulted from clean air. So, kind of, if you can capture what the costs of those are in some way, then that will help you kind of demonstrate that need.
That's a really, really good point. We are at a close. There's a few more questions here, so if anybody wants to try and find us afterwards, after the panel, I'm more than happy to answer them. Thank you very much to our panel for taking these questions from a sideline today. And thank you very much for the audience for listening. Again, we're around all day, so please feel free to reach out to us if you can find us.